I'd like to ask you, Ben Spiegel, what is the biggest risk?
So land, like I said, we were talking on we said in our conversation before the podcast began, the landlords are sued 25 times more than the next highest sued business. So we're already in a very elevated risk type of business. So I think the major form of risk, obviously, you have ambulance chasers out there looking to profit off of almost any opportunity they can. Um, yeah, so it depends really. Like for example, I own a multifamily, in Bridgeport, Connecticut, which is, about an hour away from me. And yeah, I found a tenant was putting marbles in the lobby to try to encourage a slip and fall because she's unhappy about her current lease situation. I mean, I've seen it all, and but when I think what it comes down to protecting yourself is when I first started in this, when I to give advice, when I first started in this business, I'm just looking to just minimize expenses, minimize expenses, minimize expenses, go with the lowest cost insurance carrier possible. Whoever offered the lowest premium, I'm going with. Now, after having about over a decade of experience in this industry, I am more than willing to pay a premium for my insurance provider, knowing not necessarily that my deductible is lower, but knowing that they will be there to cover me if and it's not if it's when am going to be sued by a tenant for a slip and fall, or uh, maybe there's asbestos in the building I don't know about, and that's somehow found. Or it really, could be there's 100 different things it could be. I'd say that the greatest risk just is just being a landlord and being in the position that you're providing housing to people. And that the what I guess what I'd like, is just to really not skimp on insurance expense. And in terms of just like overall risk, I think we're seeing it right now, especially in syndication. A lot of syndicators were willing to go with variable rate loans 4 or 5 years ago, just to get a lower rate, overall rate in that moment, not looking at the future in terms of how rates could move. Uh, so that just comes back to just the general principle of having a longer term hold view of your investment and really be willing to sacrifice a little bit of cost up front potentially to hedge yourself for the long-term environment. So
Uh,
that's what I would say in addition to just general liability and business income replacement insurance. Also, just in terms of when you're just kind of have a long-term view when you're looking at financing and really tenant selection and even the build quality when you're doing renovations. When you buy a building that has deferred maintenance, are you just going to put a Band-Aid on it and move along and just keep chugging along? But what you find with that is, in a couple months later, there's 20 more Band-Aids as opposed to just biting the bullet in the beginning. Spending the upfront cost is uncomfortable and it doesn't feel great in the moment of curing all deferred maintenance just immediately after acquisition. But I am telling you, it will save you money in the long run, over the long run. And it's, in my opinion, it's a huge competitive advantage if you're willing to have that operating strategy.